Hussbus bus stop. JP Hussey here, owner of the Hussey Team Mortgage Advisors, with this week's Hussbus bus stop. First things first, trim the beard down. And I found out I have no chin. My chin is non-existent. So I'll be growing that back. But anyway, today we want to talk, we've talked about this before, but want to hammer it home, talking about mortgage rates and how rates actually come about. All right. Now, the first thing, if you go to our website, thehusseyteam.com/rates, all right, you're going to see about what I'm talking about right now. And if you go to other mortgage people, lenders' rates page on their website, they're usually going to show you rates, okay? In my opinion, being in the industry and knowing how it works, is that you're really baiting people, all right? Showing low rates to grab their attention, okay? But it's not what it's actually going to be in the end. It could be lower, it could be higher, okay? There could be a lot of fees attached to that rate, all right? So we think that it's dishonest, lazy, all right, to just show people rates. Because everyone's situation is different, which we're going to get into, of how that rate comes about, all right? And we feel we could just put low rates on there all day, showing an APR, and just get people to come in, and just BSing with them all day. We don't believe that's the right way to do things, all right? So that's the first thing. We don't show rates because we want to get the correct info from you and be accurate for you up front. Not baiting you in, getting you into our world, and then you have nowhere else to go and you have to do what we say. It's not fair to anybody. Not a good way of doing business. So let's talk about this, all right? First off, almost everybody has the same base rate, okay? How rates kind of come about, right, is mortgage, it's the bond market or mortgage-backed securities. I always say it works like a stock. The pricing on a rate changes all the time, just like a stock, all right? And in the beginning of that base rate, okay, there's other things going to be added on to that. That's going to be the same for everyone, all right? So if you see some really low rates, all right, to grab your attention, in a lot of cases, all right, either there's going to be a lot of points or fees to give that lower rate. I'm going to get into that in a little bit. Or it's a really discounted type lender, okay, that may not be making that much money, all right? But if you're not making that much money, how do you think the quality might be? All right, are they going to go through your budget? Is there going to be good quality? Are they going to, know your family, know your goals, or are they just going to push you in, give you a low rate, and say have a good day? That may not be the best for you. Who knows? It could be. All right, but with the ever-changing mortgage industry, always changing, you really need that good advisor. All right, that's my opinion, and that's why we don't post rates. We'd rather form a little bit of a relationship with you with all the tools that we have, info gather, and then really try to guide you in a direction. All right, we make the same, all right, percentage on every deal that we do. So it's not like we're making more off the rate at all. All right, they are what they are, and we're just making a percentage. That's it. Okay. Now, we always believe monthly payment, how much money I need, are the two big things, right? When you go to buy a home, all right? That's what we believe in, and I think that's most. Yes, rate's important. Of course it is, right? But it may not be, the lowest rate may not be the best thing for you sometimes, all right? A lot of different things that go into that. And you just don't know what you don't know, all right? So I'm actually looking at the site right now and kind of going through this, right? What actually determines the rate? Went over that, right? Bond market, mortgage-backed securities, all that good stuff, all right? But there's a lot of other things that go into that base rate because then things get added on to that base rate, and this are the things that really do affect those rates, all right? How much you're putting down. The more you put down, usually you get some better pricing. I'm saying pricing because you can have any rate that you want. It just depends on how much you want to pay for that rate, okay? The lower the rate, the more fees in processing, underwriting fees, points, whatever you want to call it, the more of them they are. The higher the rate, the less fees they are, right? And you can even get credits back to help pay closing costs. That's why a lot of times the lowest rate's not always the best thing for you. If you're tight on money, you may not want the lowest rate because it's going to cost you more. and your payment might not even be that much higher. Save your cash is what we tell a lot of people. Your credit score, obviously, that has a lot to do with it. Everyone knows about that. That gets added into the base rate. The lower the score, the more fees you're going to pay. The type of occupancy, all right? Are you living there as your primary home? Is this a vacation home? Or is this an investment property? Those are the three occupancies, all right? Obviously, a primary home is going to have lower rates, right? Because if something bad were to happen financially to you, what are you going to pay first? You're going to make sure that your home is secure and you're going to pay. If it's an investment property, which is going to have higher rates, they're saying, all right, this is an LLC. Financially, you're having a rough time. Who are you paying first? Again, your primary. And who's going to get paid last? The investment, okay? So it's risk-based, all right? So it's just going to be, there's more risk there, so it's going to be higher rates, all right? When you break it down, it's really not that complex. I'm not the smartest guy in the world, but it makes sense when we lay it out that way. Types of occupancy, the loan term. Usually a 15-year loan term, 20-year, are going to have some better pricing or maybe lower rates or less fees, right? Less fees is the term you really want to think about when you talk about rates. But if you do a 15-year, your payment's scrunched, or the term scrunched, making the payment bigger so you can pay it off more. More goes toward the principal. So your payments could be double from a 30-year. We a lot of times recommend the 30-year. The rates aren't that much higher. The pricing's not that much higher, worse, okay? And then you can always pay towards the principal anyway to make it your own term. You'd rather not be tied to a 15, in my opinion, all right? And no way of going back to a lower payment when you can have the lower payment and pay more towards it, all right? First-time home buyer, a lot of different things out there for first-time home buyers. If your income is under a certain level, sometimes you get better pricing, lower rates, or less fees, all right? Monthly income, this is a new one the past couple of years. Lower income, sometimes you're under those limits again, you get other credits, whether you're a first-time home buyer or not, okay? So a lot of different things go in the rate. These are a few of them, all right? This is why you want to give as much info as you can. Trust your advisor. If you don't trust the person, don't work with them. You got to trust them, tell them everything so they can be accurate for you up front so you know what you're getting into and there's not going to be surprises later on, all right? Mortgage rates and APR, all right? Get this question all the time. The rate, mortgage rate is the rate, the amount of interest you're paying over time. The APR, okay, the annual percentage rate, all right, is the rate mixed in with all the other fees you have to pay when you buy a home, okay? It's all added in. Then they do another calculation, and APR is the rate if you're paying off all those fees over time, all right? Is what it is. If you see a low rate and that APR is a lot higher than that rate, that means there is a lot of fees. So you want the APR to be close to each other to have a good deal, in my opinion, in terms of paying fees, all right? How do you get the best mortgage rate? Obviously, people want to know that, all right? Fixed mortgage, save for down payment. The more you put down, that's great. It gives you more equity anyway. All right, pay your bills on time. That's the credit. Watch your credit score in case there's fraud or something. All right, you don't want to have a surprise when you go to buy a home. Take advantage of those special loan programs like being a first-time home buyer or having lower income, all right? Sometimes you don't have to show all the income and you still qualify and you get better rates. A lot of different things you can do. That's the simple answer. The more complex answer of how to get the best rate is be honest. Complete everything for your mortgage advisor, all right? I'm kind of reading this. So they can be accurate for you. Talk about your short-term and long-term goals with them. Because they may suggest, hey, you can save $5,000 today by taking this rate and your payment's only $40 more per month. That saves some money for you. Put it in the bank. Earn some interest on that with your own interest. A lot of things you can do, all right? Your budget, right? And once you get into it, you're going to realize while your interest rate is important, there's a lot more things that are more important. Saving for the future. Living a happy life. Not being house poor. Okay? It's a lot more things. So when you start thinking, I'm just getting the lowest rate possible, you actually could be shooting yourself in the foot if you don't go over your goals because there might be better options. Hope you have a great day. Hussbus bus stop.